Does the phrase appraisal gap strike terror in your heart? Or does it leave you scratching your head? What about hearing tales of appraisal guarantees that are often needed when you're a buyer in this seller's market? If you're a buyer or a seller and you're not spending every single waking moment and most of my sleeping moments too, thinking about the real estate market, you may be confused about what these terms actually mean for you, and they may feel a little scary. Knowledge is power, so let's talk about what an appraisal gap is and what an appraisal guarantee means for a buyer or a seller. My name is mschumann. I'm a realtor here in the Twin Cities, and I make videos every week to help people make smart decisions about real estate. If you're thinking of moving to the Twin Cities, I have a free relocation guide down below my video in the description box, and there are other free downloads there as well. Tap the title of the video if you're on a mobile device, and that will open right up for you. And if you have questions, please reach out or leave a comment down below, and I'm happy to get back to you. If you've watched any of my market update videos, you've heard one thing reiterated, and that is that we are in a historically strong seller's market. We have a lot of buyers competing for every single home, and that means that we nearly always have multiple offers, and sometimes those offers are for well over list price, as buyers are doing whatever they can to beat the competition. On the surface, it may seem like, okay, what's the big deal? How can that be a problem? Well, if you're paying cash, that's absolutely not a problem. You can pay whatever price you choose to pay for something, provided that you can show that you have the funds available to do so. This is a big reason why cash buyers have an advantage over traditional buyers right now, because the price is the price and the seller doesn't have to worry about the bank's appraised value. However, 80+% of people are not cash buyers. They have to get a mortgage for their home purchase, and as part of that loan, the bank will hire an independent appraiser to take a look at that property and determine if it's worth the amount that they are loaning you for it. They definitely do not want to be stuck with worthless collateral to sell if you decide that you're going to default on that loan. This evaluation is called an appraisal, and sometimes your mortgage lender's appraiser is going to determine that the house is worth less than you actually agreed to pay for it. This is known as an appraisal gap or a low appraisal. I sometimes hear buyers with high loan approval amounts suggesting that maybe they should just buy a lower priced home and throw a large amount of money at it because they're approved for a higher amount and can qualify for that loan. But that actually does not eliminate the problem around appraisal. It is actually really the reason for appraisals. So what are your options as a buyer if you're worried that the appraisal will come in lower than what you've offered? After all, a seller wants to get the price that you've offered them in that contract, whether or not the bank agrees that it's worth that money or not. The option that has been most successful with sellers is writing appraisal gap coverage or an appraisal guarantee into the contract for the purchase of the house. We are seeing this happen about 45% of the time now, and it's actually getting to be even more common as the market continues to be tight. And what this essentially means is that you will put a larger down payment on the home in order to make up the gap between what the house appraised at and what the loan is approved at. This preserves your ability to finance the purchase and close on the home. A typical home purchase contract has an appraisal contingency actually written into it already, and that says that the buyer can call off the deal if the property appraises for lower than what the buyer offered. But in a hot real estate market like the one we're in, where buyers outnumber sellers, some buyers waive the appraisal contingency entirely, and these buyers either pay cash for the home or they're gambling that they have the money to pay the difference between what the home appraises for and the price that they've agreed to pay, however much that might be. So rather than waiving the appraisal contingency entirely, which can be a really big leap for people, if you don't have a lot of cash on hand, you can offer to cover the gap on a low appraisal somewhere in the middle. You're offering some amount that you would make up via a larger down payment. So take, for example, the $120,000 offer on the $100,000 home. It has a $10,000 difference between the purchase price and the appraised value. If you had offered to cover an appraisal gap up to $10,000, you would just go ahead and proceed with the purchase and bring that extra $10,000 as a larger down payment. However, if you had offered to cover the gap up to $5,000, you would be entitled to withdraw your offer and get your earnest money deposit back because it didn't appraise at the value that you had offered to bring. That's because the difference between the offered price and the appraised value is greater than the $5,000 appraisal gap coverage that you've offered. At this point, the seller may wish to negotiate with you to keep the transaction intact, and they may agree to lower the price by the remaining $5,000 difference, or they may also choose to go on to the next buyer. You're more likely to succeed when offering appraisal gap coverage if you include proof of funds that proves that you are able to do this. If you're lucky, you may not have to worry about appraisal at all because banks are sometimes waiving the required appraisal if they can see market conditions support it and if the buyer is bringing a down payment of 20% or more. This means that they look at the market data, determine that the property is likely worth the purchase price, but you'll not know this until you're much closer to close, so you'd still have to write this into the contract. A couple of things to add as you consider whether or not to do this on your next purchase agreement. Think about the home you're buying, its condition, price, and location, and what you're willing to do to purchase that home. You really want to be doing this for a home that will hold or appreciate in value. The second thing to think of is that because of the market conditions nationally, home prices have increased over 14% year over year. Median home prices in the Minneapolis and the Twin Cities area went up 10.9% year over year, according to the Minneapolis Area Association of Realtors. So if you put that into perspective with your purchase, if you are buying a home priced at $100,000 today and prices do continue on their current path, that home would be valued at $111,000 a year from now. So if you've agreed to make up $5,000 or $10,000 in low appraisal, the likelihood that you're actually going to be whole in a short period of time is really there. The third thing to think about is whether or not you're actually going to be able to afford a home in another year or two if this continues and if interest rates continue to rise. So this is really coming down to a math problem. I've never been a huge fan of math problems, but looking at it this way really does add clarity and perspective to a decision that can kind of be clouded with emotions at times. So thank you so much for watching this week, and please let me know if you have questions, if you need help in any way, and have a wonderful week.